Hey there. Okay, we're in video number 34, but no, video number 18 from module 2. And in this video, we're going to talk about the OsMA, or the moving average of oscillator, which is right there. Okay, so go ahead, left click, drag and drop. But before you drop, go to the color tab, change it to red, and I've chosen the second thickness here because otherwise it comes out very thin. It's very hard to see. So choose the second thickness. Okay. All right. Now this indicator here is a little bit like the MACD. In fact, it uses the same 12, 26, and 9 moving averages. All right. Now this indicator is not really best used on its own. It can be used on its own, but it's not best used on its own. It's better to be used with another indicator that I'll show you in module 3, and it gives off a little bit more positive signals. There's less false ones. But the general public rule of thumb, by the rule book, is that when you see these bars appear above the vertical scale for the first time to go long, and when they appear for the first time to go short, and they come below the 0, line. Now, as you can probably see straight away, it doesn't always work in our favor if we were to go long at the first bar and then go short at the first bar and what have you. All right. So what we can do is adopt a different strategy, a little bit more using common sense. Really, is to say, right, okay, after the second bar, all right, after the second bar of the OsMA, then we go long. But we only go long, again, using more common sense, is to work out what our risk is going to be. Now, is our risk going to approach a buy trade, and is this buy trade very near a resistance level, as we've discussed in other videos previously, and which I will always be discussing in videos in the future. It's because this is something that really needs to be reminded and and instilled in your mind all the time. When you see the second bar of the OsMA, just concentrate on this one right now, and then I'm going to zoom in onto that bar so I don't lose my position, so I know where I'm going. Okay. Now, on this second bar represents this section right here. Now I need to say to myself, is the risk that's going to be applied to this trade worth it or not? Let's take a look. Well, we're 79 pips away, and that's not bad. I would prefer to have an opportunity where the next lot of resistant level is around about 100 pips away. So this maybe we can use a different example. See, these are the examples that you should only act off, and if you see any other examples that kind of look familiar to what it is I'm saying, you don't take them. Okay, they have to match what it is that I'm saying. Okay, this might be a good one. Okay, here's a good example. Alright, I believe it's a good example, at least from a standpoint. Okay, here is our second bar here on the OsMA, and it's above the vertical scale. Here is the candle that it represents. And I'm going to go over here because that's the next previous high. Okay, and as we go through these modules, you will this course is designed to give you a brief snapshot first of all, okay, because you're not going to understand. If I'm going to go everything into great detail, you're not going to understand it all, and you're going to get frustrated because you won't be able to find the point in the video that I was talking about. So I'm going to give you a quick snapshot of what it's like, okay, and then as I go along, this will make sense, trust me. So stay with me on this, alright? I know it's going to probably be a little bit complicated, but we'll get to it a little bit later. Now, we always check for previous highs when we're going for buy trade opportunities, because the market does tend to retrace towards previous highs. Alright, the market just goes up and down and up and down all the time. Alright, and more often than not, it will reach the previous lows or it will reach the previous highs. So this is why we have to look back for previous highs. And I don't really want anything in between it. Alright, I want a nice clear sailing, and this is a perfect example to give you. Alright, so here's our second bar, and we're preparing to go long, and we're working out our risk. Okay, and we want to make sure that the immediate resistance is preferably 100 pips or more. This one's 110. It actually says 1101 there, which represents 1,101 points. But it's when you're working with a 5-digit broker, as you can see here, we've got like 5 digits after the decimal point. So that's why they're using the points. Alright. So here we are with our buy trade, and we want to make sure that the resistance is at least more than 100 pips away with no traffic in between. And then we go long. Alright. Now to exit, you don't really want to exit at the next time when the bar comes below, because most time often than not you will lose most of that gain that you just had. So we will just essentially either just play this out, watch it, while we're monitoring the chart, or if you're going to walk away from the trading station and we're sitting right here, I would actually put my stop loss down the bottom here, or just below the low of the candle. Okay, and then target 100 pips. Alright, because allow for a margin of error, remember, because we might actually see that the market might hit there, or it might hit somewhere around about here. So let's account for that unforeseeable piece of data that that might come in, and then and try to anticipate it, and hopefully to catch the middle of it. All right, so that's how you would do that. Here's a sell trade opportunity right here, going on the second candle, but again it's manage our risk, and let's take a look. Well, here is our first part of our support. I would actually say no to that, even though that the market does come down. Alright, so you've got to really discipline yourself and stick to the patterns that work. Okay, you don't want to go with patterns that look similar. That's another key too, because you'll find that if you go outside that wall of safeness, you'll experience some more losses as well. I mean, even me from time to time, I tend to go outside that barrier. Sometimes I just get bored, but you've got to really control yourself. All right, so play around with the OsMA, okay, the moving average of Oscillator, and then in later modules we'll show you how to use it with another one to get more robust signals from. Okay, so play with this one for about 2 to 3 days, okay, and then we'll move on to the next video. All right, so until then, I'll see you then. Bye for now.